Hello and welcome to Business Today. I'm Siddharth Zarabi and you're watching this pre-budget special episode of Easynomics. We are counting the days for what will be Finance Minister Nirmala Sitharaman's 8th budget. And on the show today, we focus on one of the key subjects that's been dominating the discourse, not just now, but pretty much for a couple of previous budgets as well. And this is the hope of India's middle class for a significant major income tax break. And remember, this hope is not one that is just linked to the government's efforts, the CBDT's efforts to push and nudge and make sure that people switch over to the new tax regime. This is a hope that centers around a break on account of high inflation and the other sort of problems that many people, including the salaried class, have seen. Tax revenues have been robust and consumer demand, on the other hand, has been slowing down. Overall GDP numbers are also projected to slide. And in that backdrop, the demand for a tax cut has macroeconomic resonance as well. And joining me on that subject today, HP Ranina, one of the senior most advocates in the Supreme Court of India, Dinesh Kanabar, the CEO of Dhruva Advisors, and my colleague and the economy editor of Business Today, Zarabi, is also with us. Viewers, I just want to start off by saying that as you catch this show, pretty much within a couple of days, you will see the latest issue of Business Today magazine hit the stands. The cover is not yet out, otherwise we would have shown it, but it will be available all across our platforms, including Business Today TV, BT, businesstoday.in, and all other platforms where our content is available. And in that we focus on the expectations from the budget, as well as a deep dive by Zarabi on what really is likely as far as taxes are concerned. But I want to start with the experts on the panel. Mr. Ranina, is there a justification that the middle class, that's individual salaried taxpayers, have for a tax cut? And many of them keep saying, well, you know, the government gave a big break to corporates in 2019 to enhance job creation and do fresh investments. We are also contributing to the economy, so why not give us a break as well? Mr. Ranina.
Yes, I entirely agree with you. I think the salaried class needs to have a break, but that break must be in a structured manner. For example, I would suggest that if the employees put in overtime, then the overtime should not be taxed. This is some way by which you can enthuse employees to put in the best efforts and to give them the, reward for it. Also, the standard deduction needs to be increased. Of course, it was increased last time for those who went in for the new tax regime, but maybe it can be increased further. The other issue is that certain things should be allowed as a deduction. For example, if a businessman or a professional self-employed person, say, takes a car and pays the lease rent and incurs expenditure on using the car for his own profession, he gets a full deduction under the income tax law. But a salaried employee gets nothing at all. Apart from the standard deduction, he gets no deduction, though he may be using that car for the purpose of his business. So some type of rationalization needs to be done for salaried employees. And I'm sure that Mrs. Sitharaman will take this into account and give some relief to the salaried class.
Dinesh, coming to you, take that point forward. Is this really the time from an overall macroeconomic perspective to indulge the middle class, so to say?
Absolutely, yes. And sir, if I can just explain to you. So, we are seeing a drop in the consumption. And consumption can go up only if there is more disposable income available with people. And the one way to put that disposable income back to the people is by giving a higher tax-free rate for people who are paying taxes, because it will leave income in the hands of people who need it and who can therefore very likely to spend it. And when they spend it, it actually goes back to the economy, revives the economy, and part of it comes back to the government in the form of increased GST. So look at this situation. We are looking at one of the most robust tax collection years. We are looking at almost 19 to 20% increase in tax collection beyond the budget, which is saying a lot. We are looking at people having made record capital gains and therefore capital gains tax going up. With that situation and the situation that GST collections too have been high, there is a need for the government to increase the threshold limit, leave more disposable income, and ensure that people are able to spend more.
Surabhi, you have your ear to the ground as someone who has tackled the macroeconomy and North Block, the finance ministry for years now. This is Nirmala Sitharaman's 8th budget, but it's also in the nature of this government and of Prime Minister Narendra Modi over the last 10-11 years to take a larger sort of holistic view when it comes to major economic policy decisions. The 2019 out of budget, out of cycle income corporate tax rate cut surprised many. Do you think a surprise is a positive surprise is in offering for salaried income tax payers on the 1st of February?
So yes, that remains the hope, especially because, like it was pointed out that inflation has been high and disposable incomes have been going down, and growth is also coming down to less than 7% at 6.4%. And there has been talk and commentary by even companies on how urban demand is moderating. So one of the things that the middle class has been hoping and is continues to hope for is cut in the tax rates, especially the 30% rate, which just kicks in at 15 lakh rupees.
Recording
so
stopped.
If you look at back of envelope calculations, so 15 lakh after tax and deductions turns into, I would say, less than 1 lakh per month. And for many people, for a family of four, that might not be enough. And that's one of the things that everyone has been saying, that you need to review the tax rates, especially the maximum marginal rate. However, we must remember that this government has shied away from any direct SOPs till now and has focused more on indirect measures to boost growth, whether it be on employment generation, employment creation, or welfare measures, etc. So we still need to see what happens ahead.
A quick follow-up, Surabhi. This is a budget which is, in some ways the 12th chapter of Modinomics from a budgetary fiscal standpoint. Of course, this government has been unconventional when it comes to economic policy decisions. They have happened all through the year. The macro backdrop that we are seeing of growth slowing down, company and the results that we are seeing, quarterly results, clearly pointing to the fact that there is a significant slowdown. What are the possible thoughts that our budget makers would be grappling with when it comes to addressing the economic slowdown beyond just some tax giveaways?
So I think the budget will see a couple of very clear themes, which would also be in continuation of what has been done in the past. So the focus on capital investments by the government, I think that's going to continue. Maybe the rupees 11.1 lakh crore limit, we might not see that estimate seeing a significant increase going ahead, but the focus will continue, especially because private investments have still not taken up as much as we thought it would. Then I think job creation and skilling is another thing which will also continue, especially we expect that the PM internship scheme, a tweaked scheme, could be finally rolled out going ahead in FY26. And of course, the employment linked incentive scheme, that is also to be rolled out, and we have to see how that does. Then of course, MSME support is another thing which we expect to continue, and perhaps there could be higher loan limits for MSMEs. And of course, there's also expectation that the 1.5 lakh crore interest-free loans to states for capital investments, that limit could be enhanced, and perhaps some of the performance criteria could also be relaxed.
Okay. Let me come back to you, Mr. Ranina, and come back to the topic at hand. One of the points that I feel is also being discussed within North Block, and remember viewers, between the last budget in February, and we are doing an annual comparison, not the July outing, you will see that certain key economic policy mandarins in North Block have changed, had moved on. The Revenue Secretary has become the RBI Governor, the Finance Secretary is the Cabinet Secretary of India. There is, of course, a new person at command in CBDT as well. But is it likely, Mr. Ranina, that while all of us build up these expectations, the government could well say, you know, we are giving breaks, we will sweeten the new tax regime, the zero exemption or very limited exemption scheme more, and we are not going to do anything to stop the switch over towards that, and therefore you have to live with a near zero exemption era if you want to pay lesser tax?
Yes, I think what the government will now do is to rationalize the exemptions, delete or remove what is not necessary, and bring down the tax rates further if they can. But I would certainly agree that there needs to be some incentive for two things. One is higher capital expenditure, and therefore I think a certain amount of investment allowance should be revived, as it was done many years ago. First time it was called development rebate and investment allowance, but something of that sort needs to be given for higher capital expenditure. And the other thing is creation of more jobs. Creation of more jobs is a very important point because there are so many young people who are today finding it difficult to get jobs. So creation of new jobs should be a very important tool for the government, and for which they should give a sufficient tax incentive. We have a section 18 double J double A, but that is not sufficient. We need to streamline it and make it more effective.
Mr. Kanabar, the age of AI and its impact on jobs is perhaps going to be the subject of another discussion. But I come back to the point that I am pressing, which is the new tax regime. In your reckoning, is that what the government is likely to favor and perhaps sweeten that even further? And given the numbers that we have seen in terms of adoption, a couple of years ago, it kind of didn't start off too rapidly, but now with the change, will the government and policymakers feel enthused that this is the way to go, and all roads lead to the new tax regime?
Absolutely, yes. 2 points here. So first of all, when the new tax regime was introduced for corporates, over a period of time, Siddharth, more than maybe 70-80% of the corporates have already moved to the new tax regime. Because you are looking at to say, I do not want deductions, I do not want exemptions, because all those deductions and exemptions lead to litigation. Mr. Ranina rightly made a point with regard to investment allowance and deduction for new employment. But as I see, what this government is trying to do is to move away from all of those deductions and allowances. And I don't see within the government thought process today that being the approach. Similarly, in the case of individuals, the new tax regime is comparatively new, and maybe not more than 20 to 30% of the people have moved there. And what I see is the government this time bringing in more and more provisions to make it lucrative for individuals to move out from the old regime to the new regime. And I think that's very appropriate. Every single time you look at litigation, years of litigation picking up, it just makes sense that people move to the new tax regime. One other thing, and maybe totally unrelated, and you haven't asked this question, Siddharth, but one of the key themes of last year's budget discussion by the finance minister was she came back to say she wants to simplify the tax laws. So in terms of simplification, the move towards new tax regime makes sense, but it'll be interesting to see because more than 1,200 representations were made to the finance ministry. Chambers of commerce, professional bodies, firms of chartered accountants, advisors, etc., have made copious representation. It was acknowledged by the ministry. Unfortunately, as it happens, as you rightly mentioned, the Revenue Secretary has now become the RBI governor, and he was at a point of time there. But all that repository sits out with the Ministry of Finance. It'll be interesting to see how much of it gets implemented this year and in what form and shape.
Mr. Ranina, the larger question with regard to corporation tax. 2019 was a watershed moment. I remember how the markets responded, and of course, we have seen subsequent developments. As far as corporate tax is concerned, is there anything further that requires to be done, perhaps to ensure that private investment, of which we have only seen some green shoots, really takes off in a substantial manner?
Yes, that is what I suggested, that for corporate tax, some type of investment allowance may be restored for a limited period of time to kickstart capital expenditure. Because if you look at the document of Vikshit 2047, it needs a lot of expenditure to be incurred. As I think the State Bank recently came up with some figures running into some 41 billion US dollars of investment necessary. So that is one aspect of the matter. Secondly, we need foreign investment because we are going in for very high capital intensive industries like, say, semiconductors or whatever. Heavy capital investment is necessary, for which we need foreign capital. So again, I would go to the extent of saying that if a foreigner invests in India for the first time, some degree of tax holiday should be given. In short, we should be comparable with other Southeast Asian countries like Vietnam, Thailand, and others which are giving large tax breaks. So somehow we have to make sure that capital flows into India, because that is what is sorely needed if we have to record a rate of growth of 8 to 9% continuously for the next 10 years.
Dinesh, do our stock markets also need a sort of soft touch treatment from the finance ministry and the taxman, and seeing the kind of capital flight, frankly, that's been happening from the markets in the recent past? Do you think this is also an occasion to once again restore the animal spirits of the bulls?
So before I go there, Siddharth, if I could just supplement the point which Mr. Ranina made. So he spoke about how there is a need to give impetus to capital expenditure, and I think I couldn't agree more with that. And I think the one issue which comes up is that the government had three rates of tax: 35, 25, and 15. And 15, this is sort of excluding all the surcharges. 15% was for new manufacturing companies. And that came to an end a couple of years ago. And several representations have been made to the government to revive that. The proposition being that if you talk about you talk about manufacturing in India, and you want chips to be manufactured in India, etc. These are huge projects. PLI, of course, does support all of it, but there is a need for a tax incentive for manufacturing companies, and a 15% rate of tax revival of that one particular item really does not make the tax complicated, just provides a rate of tax for manufacturing companies which are new and which set up more capabilities. And therefore, to both the points which Mr. Ranina rightly made, one is incentive for capital expenditure and second is incentive for job creation, both of which could happen if this was reintroduced. But the government does not seem to be in a mood to do that. I think it's something which is necessary. And I think once the economy is revived, once you actually see this manufacturing in India take shape, many of these government policies actually get implemented. The point which you made with regard to the stock market getting a fillip will happen, because ultimately stock market is a reflection of how the economy is going and what people see as opportunities. Today, I was asked this question at another forum as to the government is coming back to say that we reduce the rate of tax. Companies are making larger profit. Those larger profit has not seen employees get much larger increments, and nor is any capital expenditure. And the point I would make is that companies will always want to make up capital expenditure if they see opportunities. It is for the government to create in this budget that opportunity where corporates will be incentivized to incur capital expenditure and give a fillip to the economy.
Surabhi, what are we missing in this debate? Purely focusing on the overall tax priorities that budget 2025-26 is likely to focus on. What have we not yet discussed during this conversation?
I I think there are two more things, in my humble opinion, that could possibly come up. One is further simplification of the TDS regime. This is something which the finance minister started in, budget 24-25, and there is expectation that more rates on TDS could be merged and uh, more simplification could be done, partly also because the review of the Income Tax Act, that is going to take longer. So this is seen as one of the quick fixes that can be done to ease compliance and also lower litigation. Secondly is the review of the customs duty rates and tariffs, which is also, which was also announced in the last budget and could really come in handy because we are in the middle of, a changing world order where Trump is supposed to take charge of the White House on 20th January when he'll be sworn in, and there's concerns over tariffs and how global trade will shift. So a review of the customs duty rate could actually help boost domestic manufacturing to some extent. So these are two other things I think that could come up in the budget.
And viewers, just to add one more point to that, really, to take off from where Surabhi was talking about import duties, look at what is happening to the Chinese currency against the dollar. And it seems to be that Chinese policy mandarins are preparing in anticipation of likely punitive tariffs and therefore trying to protect their export competitiveness. Look at what's been happening to the rupee, particularly earlier this week, and it seems to me at least, and some of us really, that there could also be a similar tactic that is being deployed, although the RBI seems to be buying dollars once again. But that's a broader point, and the reason why we are talking about this is that in any decision where revenue gets impacted, policy takes into account multiple factors, and this is also one of these factors. Mr. Ranina, a larger point to you with regard to long-term tax stability. If we compare the last 11-12 years, one of the things is that there haven't been too many rude shocks, or perhaps none at all, at least of the scale of what were administered during the previous 10 years, including the retrospective amendment, just to jog people's memory once again. How significant has been the tax policy certainty, stability that Modinomics has provided in its first two outings, and how would you hope that they stay on the path in this third outing as well?
Well, the main stability provided is to show that they want to reduce the number of exemptions and bring down the rates of tax. But I'm still a little worried about the number of amendments which are introduced in every finance bill. Even last year in the month of July, when we had the last budget, there was something like 150 amendments. I don't think that's necessary at all. I think the income tax law has been developed on its own, and I think they should stop making these amendments. If you look at the finance bill, you just go through it. I think they must bring some stability. One more point, Siddharth, which I would like to emphasize, is the litigation amount. That the period of litigation which takes time to complete the entire process. So today, foreigners don't want to invest in India. One of the important reasons is that there's no tax certainty as far as their own personal taxation is concerned, because the dispute may go on for 15 to 20 years. And that has to be curtailed. And for that reason, we not only need administrative reforms at the income tax officers level, but we also need some judicial reforms where special benches are constituted by the high courts and the Supreme Court, so that important matters are disposed of within at least 2 years, and the litigation should stop after that.
Dinesh, the same question to you really. Beyond just immediate decision, and perhaps linking it also to the revamp that has been promised, what kind of broader signals would you want to hear from the finance ministry?
I think Surabhi made a point with regard to TDS, Mr. Ranina made a point with regard to mitigation. What people are essentially looking for from taxation is ease and second certainty. There are two things. So take TDS as an example, or TCS also, collection of tax source. This is supposed to be an additional compliance burden. When you are doing a TDS, it is not your tax. When an employer deducts tax from an employee, or a contractor's tax is deducted, it's income of somebody else. You are only acting as an agent of the state and paying the money. And then you are subjected to litigation to say it should be deducted not at X rate but at Y rate? And why do you subject a person who's withholding taxes to such litigation? Can we not ease it? To the point which Mr. Ranina made with regard to litigation, actually there is an even more fundamental issue. So, for example, for the last 5 years, the disposal of appeals at the first level has been very low. And therefore, what has happened is matters are stuck up. So, to explain to you, let's assume a taxpayer has returned an income of 100. The officer assesses at say 250. On that 250, whatever is the tax, 20% is required to be deposited as you go into an appeal. That 20% is a burden to the taxpayer. And should the person lose in appeal, the government did not get 80%, which it should have. Now, that expeditious disposal of appeal therefore becomes very, very critical. We have a peculiar situation today where the tribunals are actually having enough ability to dispose more and more appeals. But because appeals are not decided down below, it does not get discussed. And the other thing is that does everything need to go all the way to the Supreme Court to decide? Can there not be a provision for a settlement of a dispute between the taxpayer and the revenue? All of these have been suggested, and one is waiting to see how does all of these proposals get implemented or by the finance minister in this budget.
Okay, Surabhi, as we wind down the conversation, reporters have their ear to the ground, and 8 budgets for the finance minister, right up there with there is, of course, she probably has a couple more to go to break all-time records, I feel. But when we look at our budget making, its relevance in the size of the economy that exists versus when it was much smaller is a matter of debate. What kind of stamp do you think Nirmala Sitharaman, as the Minister of Finance, is likely to bring to the overall policy document, something that would be like really close to her heart?
I think one of the biggest achievements of this finance minister has been that the projections in the budget have all been very plausible and very erring on the side of caution, if you may say so. And it's been one of the reasons why the budget making process has done exceptionally well, and it's led to a lot of investor confidence as well, and a lot of the targets we see actually get improved upon in the revised estimates, whether it's tax collection or fiscal deficit. And I think this is the art of budget making, where you know what is possible, what is not possible, and you match the two in such a way that you gain confidence as well, while you show that you can do better than what you had set out to do.
Well, clearly, viewers, we'll have to wait for that speech. Always average around 90 minutes, plus hundreds and hundreds of pages, which these days you mostly get to read only digitally. But the big question, and my guess, I think the final decision will be between old style giveaways, which the policymakers and the governments, both at the state and center, are now doing in many ways. The size of our welfare economy has gone up very significantly. And the other option is nudge theory, where taxpayers will be nudged towards the new tax regime, and perhaps that will be the most that many people will get from any tax measures in this budget. We'll have to wait for the actual announcement, but I'm going to thank Mr. Ranina, Mr. Kanabar, and my colleague Surabhi for their time with us today. With that, it's a wrap on this show. I'll come back with more on what to expect in budget 2025-26. Until then, goodbye.
Devan bhai, a strong move on Zomato, Swiggy and Paytm after a serious bout of profit booking. Are these levels which you would recommend to get back into,